This video, we're going to look at Amazon. That's going to be ticker symbol AMZN. And we're currently opening up our weekly chart here. And you can see that we have these gray shaded rectangles in here placed. And then these are going to actually represent the expected move of this underlying by our options monthly expiration cycles. So each one of these represents 1 month of a cycle in here. So right now, this small rectangle represents from today going into your April expiration cycle, which everybody's pricing in right around that $10 to $11 expected move. If you go from April to May, that's what this medium size rectangle is representing. That's going to give you an $18 expected move. And you go all the way out to May until this June time frame here, which is going to be right around that June 20th. That is what everybody's pricing in right around a $22 expected move. So we have this on here because this is more or less your standard deviation, and it's kind of confirming what we already know, and that is we have this lower trend line here. You can see we have this on the weekly for the past couple years here. We've just been bouncing off this lower trend line as we worked our way higher, and it's kind of confirming that here on the weekly chart, the stock doesn't really want to run up just yet. It still wants to take a couple weeks and to kind of bounce off this lower trend line here, kind of confirm it before we kind of take off. And this this candle that we're placing right now, we are in the middle of it, right? We only had 3 trading sessions, but today, the reason that the body is so small in this is because today we just wiped out the gains of the past 2 days. So you had these highs in here on that huge gap up on Monday. We're ready to, we're all green, 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 ready to go. And then today just wiped out everything. So it looks like we're not helping ourselves out here with this 9-day EMA, which is currently trading at that 208.28 mark. And it looks like we kind of want to work our way down here to this lower trend line, which is going to be right around that 193 area. If not, then we're looking at the 191. So anywhere in there. And then within the next couple weeks, our expected move in here, like we mentioned previously, is right around $10 to $11. So all of this would fit right in line here with our TA and our expected move of what you have the options traders expecting according to the volume and volatility of what the stock may do. So this shaded areas are more or less our speculation on top of more speculation. And that's kind of how you get these expected moves priced in. Also, this is going to confirm what we just said here is going to confirm with our volume here, low volume compared to the last 3 weeks, and our RSI not helping ourselves out in here at all because guess what? The volume's not there. So the RSI isn't really going to pump with it, right? So low volume compared to the past month or so, or I'm sorry, the past about 3 to 4 weeks or so. And then the RSI is not helping itself out at all. So do not be scared when you open up a daily chart and then you start trying to see something that's different. Well, does it really tell us something completely different? You have the 200 in here lining up right with this 9-day EMA, the daily red candle in here you had a high in here of 206, low of 199.93. It landed right on that 200 SMA. We're on that 200 psychological level. Is this really telling us green? Not necessarily, because we don't know what this 9-day EMA and this 200 are going to do. They're right next to each other, right? They're basically at the 200 mark. So this isn't really telling us something different than what the weekly is. It's just saying, hey, hold on here. Everything's just kind of set up. We're kind of taking a breather here. Let's wait and see what is going to happen. So I don't think you're going to get a big rip here to the 211s in the next week or so here soon. Because we're going to be outside of our gray shaded area, but at the same time, we don't think we're going to get a huge pullback in here either. Maybe just a little bit, and then we're going to start fighting with this 200 SMA again. So when you're looking at these longer time frames, you don't really want to kind of keep on working your way down until you get something that you like. No, you want to take what the longest time frame is telling you, and then base your assumption on that, and then kind of see if you can see what the weekly is telling you against to the daily. And then you can dig into the 4, and then you can dig into the 30-minute, whatever. But always take that longer term time frame into higher consideration when you're trying to play those longer dated options and things, right? So when you're playing weekly, you're trying to play leaps, you're trying to go out a couple months, sell some premium off something. You want to look at the larger time frame charts, but then you also want to look at the shorter dates, just kind of confirm what you're seeing. But you don't want to take a 30-minute into consideration when you're trying to play a 2-month out leap call that you're going to buy or something like that, right? So hopefully Hopefully that made sense. I understood I'm kind of rambling there. But we're looking at the weekly on here. We'll go back to there. Those gray shaded areas. The daily isn't telling us something different, although it looks like it may be, but it's not. It's not saying green. It's just saying, hey, you happen to have an SMA of 200 and an EMA of 9, and they're right at each other, right? We're not confirming a crossover, not confirming a cross under just yet. They're there. But the weekly is telling us, hey, we don't think we're going to kind of bust up here to these 217s, 216s anytime soon in the next two trading sessions in the next couple weeks. It looks like we want to have a magnet here to this lower trend line, right? That 193 first, and then we can work our way higher. That is kind of what everything's telling us. That is what's right in line with our assumptions here compared to our what everybody's pricing in for your options expectations for or I'm sorry, the stocks expectations for the next few months as far as what the tolerance is going to be, the highs and the lows in there. So the IV rank in here is fairly decent. You have an IV rank of 35. The calls in here on Amazon today were traded about 2 times more than the puts. So obviously you have a lot of volume in Amazon. It was about the seventh highest um, uh, stock that had the seventh highest options volume today in here. And you're kind of always going to kind of get that with Amazon. It looks like the calls were traded 63% and the puts were traded at about 36%. So double the amount of calls were traded in here than the puts. That kind of, even if you go out to your monthly cycles, that confirms it because you're looking at volume here within the thousands. If you go out to May and June, where you're only getting hundreds traded in on the put side in those same monthly cycles. But if you are trying to kind of trade your standard deviations out here on your gray, we always will say, hey, go out as far as you can, give yourself as much time, and there's still some good juice. So your IV ranking here, as we mentioned before, was right at 35, decent juice in here. If you want to sell a strangle, we can look at the 180 and the 220 strangle in here at May expiration. You get about $6.70 off of it right now. So that's decent. And especially if we kind of suck out all the premium and kind of head right down to this lower trend line, you're still going to be right in there in the gray area, right? So this 193 is going to end up right around here. You're still going to have some good juice in here. We can even close it or you can roll it, whatever you want, kind of roll this top side down if you want to tighten it up as we go. But you have decent juice in here and some premium to take out if you want to start kind of selling against these standard deviations out here, these expirations. I'm sorry, the expected moves, if you will. So again, it looks like Amazon long term. What do we want to do here? We kind of want to go back on this lower trend line, or at least stay within this gray area here soon before we get ready to rock and roll in here. And we're not helping ourselves out with this 9-day EMA at all. So we're looking at the 210 level. We're looking at that 215, the 193, and we can go down to the 191. That is going to give us a kind of a short term as far resistance and support as far as the next couple of weeks. If we go all the way out to about a month out, we're looking at the 220 and the 180 areas as our next support and resistance in there. So again, decent juice, good volume on the call side in here to take advantage of. Don't let the daily fool you with that 9-day EMA and the 200 SMA in there. It looks like the overall with stock kind of wants to kind of go back here and kind of consolidate here on this lower trend line first before we get a nice pop. But again, we will wait and see. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.